Hi, in this video I'll be going over the fundamental accounting principles. So the principles in this video will be the ones set out by the IFAC, so the International Federation of Accountants, and so they have this code of ethics for professional accountants is what it's called, and this outlines 5 fundamental accounting principles that all accountants must adhere to. So the main reason for having a code of ethics and having some fundamental principles is because a number of accounting judgments can be subjective. So we have to make these judgments in an ethical way. So a lot of people might see accounting as just being recording of what is actually there, just recording some numerical value which is going to be some exact science, but in fact, a lot of accounting comes down to making judgments, and so if we don't make our judgments using a proper framework and in a proper way, then we can end up with some accountants coming to one conclusion and other accountants coming to a different conclusion. And if that is the case, then the whole idea of accounting suffers, and there becomes a lot less trust in the profession because it's just coming down to a judgment which may be influenced by a number of factors that are not ethical. So let's get into the 5 key fundamental principles, and these are going to be integrity, objectivity, professional care, or professional competence and due care, confidentiality, and professional behaviour. So we'll start from the top and start with integrity. And we should have some idea of what integrity means, is that an accountant should be honest and straightforward in all professional relationships. Again, they should act with integrity. And a lot of these principles are deliberately set out in quite a vague way, and they're open to interpretation because these are just principles. They don't tell you exactly what you should do, and well, in becoming a chartered accountant, we get a lot more into the specifics of what an accountant should do, the actual way an accountant should act, but these principles are quite general. So, okay, an accountant should act with integrity, and so we have some idea of what that means. I won't go into too much detail on how to interpret that, and we don't really need to. We just need to have an understanding of the sort of things that an accountant should do. So the next one is going to be objectivity. An accountant should not allow bias, conflict of interest, or undue influence to override their professional judgment. So an accountant needs to be objective. Again, as I said, there are a lot of judgments in accounting. We have to say whether something is good or bad and put our own opinion on certain things. So it's an important aspect of accounting that an accountant should not be biased. So for example, an auditor isn't allowed to have, say, investments in the firm that they're auditing because that might lead them to have a conflict of interest. They want to say that a company is performing a lot better than it is, so the share price goes up, for example. Or we could have influence that maybe someone that they know has an investment. So well, that's independence, which is one aspect of objectivity. So again, I'll try not to go too much into detail on this, but an accountant needs to be objective and not subjected to any of these possible biases that will influence their judgment, and it will turn from a professional judgment to being an unethical judgment. So the next one is professional competence and due care. An accountant should maintain their professional knowledge and skill at a level required to ensure their employer receives competent professional service. So again, not exactly concrete here what that actually means, what is a competent professional service, but if we were to go more specifically into it, we would say that, okay, an accountant needs to stay qualified, they need to keep their qualifications up to date, they need to keep studying, and they don't want to they shouldn't let their knowledge fade away. And if they're not well versed on what the actual, say the textbooks, let's say what the textbooks say should be done in a certain situation, then they need to go back and read up on the exact principles and the exact rules and regulations in an area. So an accountant should act in accordance with applicable professional standards when providing services. So a key thing is that an accountant needs to always be up to date on what the professional standards are. And these regulations do change, and they change across countries and across time. So an accountant needs to stay up to date with what the regulations are, and they should act in accordance with them. So that's professional competence and due care. The next one will be confidentiality, maybe a simpler one to understand. An accountant should not disclose confidential information to a third party without proper authority unless there is a duty to disclose. Confidential information should not be used for the personal benefits of the accountant or third parties. So obviously an accountant, in writing up financial statements, can get a lot of inside information on a firm, and they need to be very careful with this. And this is why one of the reasons there's a lot of regulation here. They should not be going around telling people this information unless there's an obvious need to do it. So a duty to disclose, this may be to, say, legal authorities if they believe that there's, say, a money laundering offence or anything illegal going on, but also people on their team that are actually conducting the accounts they can speak to. But you have to be very careful with this. Some things even should not be reported to team members, depending on what they are. So again, an accountant needs to know the rules and regulations regarding that. I won't get into too much detail, but you've got to respect that some information should not be disclosed to some people. The final one, again a very vague one, is going to be professional behaviour. An accountant should comply with the relevant regulations and avoid actions which discredit the profession. What this point is getting at is that accountancy really relies on trust in society. The whole idea with an accountant and having, say, an objective accountancy firm doing a company's accounts is that we need to be able to trust what they say and what they do in order to really be able to trust our financial system. We're not going to be investing in companies if we don't believe what the financial statements actually say. So again, a lot of this comes down to ethical behaviour and being professional in the way that an accountant operates so that we can trust them. And if one accountant does something really bad, or if multiple do some unethical things, for example in the 2008 financial crisis we saw a lot of that, this can start to discredit the profession and people lose trust in the whole system. So that is a key one. Again, vague, but it gets at an important point. So that will just about wrap up this video. I hope this was useful. Please do leave a like if it was. Check out the accounting playlist for more videos on this topic, and subscribe to add some econ to your subscription feed.